This week, the US dollar was caught in the middle of one massive battle. Strong US economic data versus shifting Middle East headlines. And the result? One of the most volatile weeks we've seen for the dollar in months. At the start of the week, the market was heavily focused on the Iran-US conflict and the Strait of Hormuz. When tensions escalated, traders rushed into the dollar for safety. Oil prices surged, inflation fears jumped, and the market started believing the Federal Reserve could keep interest rates higher for longer. That initially supported the US dollar index near the 99 to 100 zone. But then came the twist. Midweek, reports of a possible US-Iran ceasefire completely flipped market sentiment. Oil prices collapsed, risk appetite returned, and traders dumped safe haven dollar positions. The dollar index fell back below 98 as markets suddenly started pricing in possible Fed rate cuts later this year. That weakness sent major currency pairs flying. Euro-USD rallied sharply toward the 1.1780 region. GBP-USD pushed towards fresh multi-week highs above 1.36, while USD-Swiss and USD-JPY stayed under pressure as safe haven flows rotated away from the dollar. But the biggest event of the week came on Friday, the US non-farm payrolls report, and the numbers were stronger than expected. The US economy added 115,000 jobs in April, beating forecasts of just 62,000 jobs, while unemployment held steady at 4.3%. That told markets one thing very clearly. The US labor market is slowing, but it's not breaking. Normally, strong jobs data would send the dollar exploding higher. But this time, the reaction was surprisingly muted. Why? Because traders are no longer only watching jobs data, they are watching inflation, oil prices, and the Middle East conflict. Even though payrolls beat expectations, softer wage growth kept markets cautious about aggressively buying the dollar. So, instead of a massive breakout, the dollar stayed stuck in a choppy range near the 98 level. Right now, the market is trading three major themes. Number one, Middle East tensions and whether the ceasefire holds. Number two, oil prices and inflation fears. And number three, whether the Federal Reserve keeps rates higher for longer or eventually pivots towards cuts. And honestly, that combination is creating huge volatility across every major USD pair right now. So here's the big question heading into next week. Do you think the strong NFP report is enough to keep the US dollar supported, or will geopolitics and falling inflation expectations continue dragging the dollar lower? Drop your thoughts in the comments below.